Sellers advanced again this week, but buyers played defense off of the key demand zone that's been holding price up since the November election. So, was it just a short covering rally, or are buyers going for new highs again? My name is Lamont. I've been a full-time trader for 8 years now, part of the Chart Guys team for more than half of that, where I head up our futures room in the swing report. And in this video, we will cover that and more. So let's get into it. All right. So as I was saying, the key structure that we're watching out for ever since the rug pull situation occurred is this guy again, right? So here is the November 6th election reaction, the gap up after that. And you can see how all of these lows throughout all of this balance ever since that election reaction had pretty much been made off of this guy. Now, they're very clean defenses of the high of the range, the value area high, the point of control, value area high, point of control. You trade almost entirely through the range, right? But you don't get to the low of it over here, pop back over it again, and then the low of Friday and the week was set pretty much right off of the point of control of this structure. So the market is being very clear, letting us know that the key demand zone is this guy, right? And that makes sense because this is pretty much the same as the election reaction, right? Like this guy over here is kind of like a proxy, right? This gap off the reaction, this structure is pretty much right in the middle of it. So it's very similar to GME, what GME has been doing for quite some time, trying to either affirm or negate this gap. And as of right now, it's affirming it. This gap was the like his first Katie's first tweet in like quite some time. And then this was essentially all a balance, right? It's look at all this price action that you have within this gap, trying to see whether or not that reaction is valid, whether or not the market will continue to affirm it, which it is right now, as long as it's holding over 24.77. Anyway, that's not really what we're focused on right now. But anyway, that's the key demand zone. And so next week, this was very likely a lot of short covering, right? Because this was all pretty much one-way trade. And so, these all of those people with late location sells, all of those stops become buys, right? And so, it was very rippy towards the end of the day. And if you look, I thought I had my market profile chart up, but I don't. But there's a lot of single prints, and that's just kind of how it has to go, right? And so then what are we going to look out for next week? The primary upside reference is 598.16, right? Just like we were looking at this structure throughout all of this, because this structure, again, we've mentioned this many times, but we have to just continue to use the same references, right? Because that's all we have in life is references. And so this was the FOMC December reaction, right? This is where the Fed turned a little bit hawkish, and then the buyers couldn't hold over here. If they could have held over here, then this trend would have been just fine, holding a back test of prior area of demand, and then they're positioned well for a break to new highs. So that's what we care about right as of right now. As long as we're holding under 598.16, then these sellers are still, the odds of us seeing further balance would increase. But if we're over 598.16, just like over here where these sellers are having a hard time hanging out under, and eventually they go for that break, we'll be pretty much right back to looking at that again. Now, this could be a situation where we were just too long over here, right? Just too many people, not great location. Got to take some of these guys out, and then these buyers have another go at it. So if we zoom into this session, let's pull up the ES chart. If we zoom into this session, right? So I guess we should actually look at this pie chart, but just to give you the consistent levels. And so essentially what we want to see on Monday, right, to see whether or not this balance is going to have legs is to hold over this, right? All of this sideways trade over here is essentially all demand now, right? So just like we're looking at demand zones on the daily time frame, we can apply that same exact logic to every single time frame. So if on Monday these buyers can hold over 587.98, ideally over 589.10, the value area high of the session, which is pretty much roughly the lows of this supply that we just broke out of. So essentially the buyers are negating this breakdown under this low. And so in order for them to stay constructive on Monday, they need to hold over 589.56, which is again roughly the value area high of yesterday, Friday. So that's pretty much it for SPY. I don't think this came into our buy zone because we were looking for it kind of deep. But I do still think this is pretty reasonable, looking for a potential pop and drop again. Primarily if you are hedging your like longs, right? Like if you're already very net long, you have retirement accounts or whatever, then I think you probably want to take this hedge scenario a little bit more seriously. But if you aren't incredibly net long, then all of this is still relatively constructive, right? All of this is still constructive relative to the July 2024 high and the election gap. So it is still an aggressive sell. But again, it's always a matter of context, right? Like your own personal context here, how much did you prioritize that sell is really heavily dependent on how net long you are. So that's pretty much it. And I guess it would be important to also consider like how much risk you have in those longs, right? Like if you're in swing trades, if you have like covered calls on or whatever, or they're already paid positions, like they're free rolls or whatever, then again, the hedge is probably less of a priority. So that is really it for SPY here. So moving on to the QQQ. So the Q's in our buy zone, right? So this is just looking for the potential that these sellers will fail to hold on the July 2024 high again, which is what happened over here, what's happened over here, and what's happened over here. So this is notable. The sellers made it all the way back down under the July 2024 high, but found support off of this guy. And this guy is essentially just a gateway structure into all of this balance that's under the July 2024 high. So as of right now, again, like we were saying last week, technically still not really created any damage. This is all just balance. This is still all just trading sideways. There's no change relative to, again, the November 6th reaction, right? So again, these sellers are trying to negate this gap and they didn't even fill it. So while it looked really bad, and this is the most notable series of selling in a very long time, no real change. This is really still just balance. So if we're balancing, responsive trade remains appropriate. The Qs are a little bit weaker than the SPY here, right? Because for the SPY, this is the daily breakdown point over here, right? And so the buyers very, very clearly made their way back over this breakdown point. Whereas if you look at the Qs, it's not what happened. The Qs did not get back over the breakdown point 519.44. So next week, if these buyers want to negate the change of this daily breakdown, they need acceptance back over 509.44 first. And we can look at it in the same way from the session to session perspective. We just want to see we just want to see acceptance over the high, right? So this is all the demand zone now. No. So at this point on Monday, holding over 504.03, but ideally holding over 504.67 would let us know that, okay, this bounce still has legs on it. Okay, so that's pretty much it. You can see how squeezy it got once we got over this initial high. So this end of the day buying was likely very emotional buying. So that is pretty much it for the Qs. If you use this trade zone, this shared trade zone, you got to watch out for this level. It's very important next week. Like because assuming you got three fills here, your average is right here. If you come and pop and drop at 509.44, it would be very reasonable to like chop that position up, take your risk out of the equation, and throw your stop onto the local low. Whenever you're dealing with like picking a top or a bottom, in my opinion, that's a better context for looking to take your risk out, right? Because trying to pick a top or a bottom is often trickier. It's almost always trickier. Whereas playing like a follow up play, the second day affirmation play, it's a little bit easier typically, right? Because the buyers have already kind of stepped in, or the sellers, whoever made that initial move, has kind of already made a statement, right? And so now you're kind of just looking to affirm that statement. Whereas if you're trying to pick a bottom, you're trying to figure out where they're going to make that statement. It's much harder. It's kind of like America joining World War II, right? Like after, I forget what that Churchill quote is. It's you can always count on Americans to do the right thing after they've done everything else. They tried everything else, which is low key a sick burn, right? But it's very apt. I would say, but it's kind of like that, right? Where we entered the war kind of late. Everybody was all, people were already battle weary, right, and whatnot, and so Yeah, and that's kind of what it's like to be in after there's already like a turn, something has already occurred, and then we come in later. It kind of improves your odds, right? Because you can assess the situation, you have more information as opposed to, not going into something blind and then trying to catch that right away. So um, that's really it for the Qs. There's a ton of space for a daily lower high. I don't really consider this rinky dink one over here terribly important. I would say anything under 540.81 would be good for one. And so that's really it. So we're just looking at responsive trade again. Responsive trade has worked back here for us in the past, I believe, right? That was the higher low one, and then this one, so you just do what works until it doesn't, right? This is all just not this one, but that original trade zone was just responsive trade, and this new one is very similar to that old zone. It's all based off of the same structure. This is really one of the benefits of using volume profile analysis is, and horizontal levels in general. It's like you already know the location. You already know where you'll be interested, and then it just becomes a matter of like waiting for your setup when you're at that location, you know. So not to say that you're always going to pick the right location. That's not what I mean, of course. But the idea is like you have a good idea of where you are willing to take action. You never have any idea of what's going to happen at the location, right? Like trading is not a game of predicting. It's not a game of knowing. It's a game of probabilities. So that's really it for the cues here. Moving on to the rut. All right, so the rut, like we were saying, recall that we were watching this major point of control 21760 from this guy over here. And we know that this is the structure that's back in play. The market has affirmed its significance over here. It's affirmed its significance over here, the value area low over here, right? It's affirmed the significance of the point of control over here, right? All of these lows are just lack of acceptance under the POC hold, etc. Then we came back down, failures to hold it, drop and pop, and now you lower high right off of that point of control, and then where is the low of the week made? Right off of the value area low of this structure. So again, the market's being very clear right now about what it cares about in the rut. And so at this point now, there is some relative strength here, right? Especially compared to the Qs here, because again, they did get back over this breakdown point. There is technically still space for a daily lower high under 218.41. And for everybody, we're going to be looking at this session or yesterday's session as our reference heading into next week, right? And so for the rut needs to ideally hold over this guy, right? This level over here, which they barely made their way over, 214.02. The line in the sand is 213.42, right? The point of control of Friday becomes super important for bounce follow through now for both the ES, for everybody, ES, NQ, RTY, really everyone who had got any kind of bounce, any asset. The goal now on Monday is to just now hold over the point of control of Friday. And that would mean that these buyers are positioned well to move value higher from session to session. And that would affirm the bounce from the Friday's bounce. So that's really it. Do we have trade zones for this setup? I think we have a short sell setup off of this guy. I still think this is very reasonable, especially if we rip straight up into it, selling off of this supply, looking for a potential balance within this local range. I think that makes a lot of sense. All right. And I don't think we had any buys set up. I don't think so. So that's really it for the rut. I think I just wasn't terribly confident in looking for the buy there. Yeah, that's really it. And so let's move on here to the Dow. All right, so for the Dow here, where my drawings at? All right, so for the Dow, dipped into our trade zone, obviously just to the top of it now, and I still think this is reasonable, right? So again, we're just doing responsive trade here. Like I was saying last week, if you want to be a bit more conservative, you can just keep sticking to this one. This is really why I find this to be much more important than all of this local demand here. That's why we made this range so big. It is still a 2R trade, and it's only 2% or so risk. So I still think this is reasonable. But like I was saying in the prior weeks, this is really where we want to be at. So if you miss this and you're just waiting for it down here, I would that's fine. You're not going to get everything all the time. It's more important, I think, to just stick to your plan, to create a plan, stick to it. And that's going to give you the necessary experience, right? To know when to apply some kind of nuance to the trade, Does that make sense? Like you that's probably the most important thing. If especially if you're a newer trader, you're just getting, just getting your legs under you. The most important thing is to always have a plan, right? It's kind of like Arrested Development. Always leave a note, right? That's it. Right, that's what it is. Always leave a note. Yeah, it's always leave a note. So anyway, that's key, right? Because then you can control for variability, right? Especially if your plans always rhyme. If you're always doing things very similarly, right, and you do it very consistently, you start to realize nuances about what you're doing, right? And then, or like nuances of the context in which you're doing those things, and then that allows for like more complex planning in the future, right? That allows for you to now, okay, I understand that this context suggests that we should do this kind of a thing, like what I was saying earlier when you're picking a bottom, right? When you're trying to pick a bottom, pick a top, um, I prefer to use a tactic where you essentially dance tactic, right? Where you front load the risk and then take your risk out of the equation and then try to hold a partial. That's more appropriate for like picking tops and bottoms, which is what Dan does. And then, in my opinion, the follow up trade, right, where you can expect a bit more momentum on like the for an affirmation day after something major has occurred. So, for example, like this, right, you have a major hold of a key level, and then this affirmation day, that day is easier context for ads, which is like the NQ buy, right, from a few weeks ago. That was the next day, right? So I can just go here, right? The buy that we talked about here, right? This was major hold, missed the point of control. Next day, this is appropriate for adding because you can kind of expect these buyers to, they've already started, they've already shown their hand, they're arrived and they want to get something done. So now you can have more confidence joining that momentum and adding to it. Whereas looking to pick a bottom and then adding to it is it's much harder. So anyway, that's the idea, right? Have the plan, be consistent, observe nuances, and then develop unique plans for different contexts, different circumstances. Okay. So anyway, I still think this is a very reasonable sell. Looking for a potential rejection from this guy, essentially again, but it's off of this local supply. Um, that's really it. Again, these cells are aggressive, right? Because these guys, all ES, NQ, RQI, they're also just balancing over major breakout points. So all of these cells are still aggressive. I think it's very reasonable cells, but they are still aggressive. So that's really it for the Dow. And anything under 446.80 is going to be good for a daily lower high. All right. Moving on to the dollar. So as I was saying, there's really no change to the dollar, at least from this outlook, right? The dollar, we still primarily care about this guy. Why? Because this was the supply that was containing price throughout this 2 years of sideways trade. And you can see how it's a battle for that over here. You break out over it, dips into our trade zone, gets to the target, dips back into our trade zone. And as we were saying in prior weeks, we don't have to change this. Like this trade zone still makes a lot of sense because as long as you're holding over this guy, they should be trying to get to this supply over here, which is what they've already done once. You break over this guy, right? Where do you rally to? 109.365. Can't find acceptance above. Okay, if you can't find acceptance, if buyers can't find acceptance above their next target, what are the sellers going to do? They're going to try to negate this breakout. They're going to try to reverse what just happened. That's always the name of the game, right? It's like playing a sport or a fight, right? It's always this back and forth action. It's the same thing in the market. Um, so as of right now, if you are using this trade zone again, average fill would be here, assuming you use it just to like, to a T. I would wait no later than 107.895 for an exit and then pull any limit orders down here and then walk your stop up here and then see what the market will give you because, and then take another exit no later than 109.365 and then, hold on to that partial and see if these buyers can trade back into this supply, which would be very notable. That would be super notable for the dollar. All right. So again, this was for an ad as well from this over here. So, if you're in from here, you should be sitting pretty and the ad should also be doing okay right now. Obviously, we'll have no idea what happens next week, but as of right now, it's looking okay. Hard to ignore. This looks like a potential head and shoulders. And so if this is going to be a head and shoulders, then these sellers need to reject from the supply that's making the head. Okay. So that is really it for the dollar. Again, you can be topish in this range as well, but it's pretty aggressive. So Okay, so NVDA again dipping into our trade zone. And so why is this our trade zone? Because this guy over here is what's been supporting price throughout all of this balance. So we primarily care about 114.71, and this was a notable failure for these sellers to not get back down to 114.71, continuing to affirm this structure as demand. So again, traders do what works until it doesn't. I continue to stand by this trade zone. It still makes sense. I personally was hoping that we would get even weaker and come back down here. I still don't think that's out of the picture. That might be in the cards. Um, so that's me. With my NVDA position, I'm just being really picky with it. It's already decent size, and this is a really great credit selling environment. So I'm not really stressing it. Um, but if you did use this trade zone yet again, this is a situation where look to chop it up no later than 131.26. Walk your stop up under the low. Chop it up again no later than our target here, 140.73, which really should be lower, like 137, 138 ish. And then see if these buyers can break out of this big old range to the upside, obviously. That's really it for NVDA. What's SMH look like? We don't really. Maybe we should just cover SMH instead of NVDA. I guess NVDA is a better bellwether. It's like the leader of the space from a hardware perspective. Um, Whatever. We'll keep covering NVDA. I get a lot of messages about it, so we'll just keep doing that, I think. All right, so moving on to Bitcoin. Bitcoin, this is a very notable breakdown, right? This is the most follow through that these sellers have managed under this key structure that's been holding up price throughout all of this balance. And so now at this point, it's a reasonable sell, right? Looking for a sell off of this guy, right? So something like this, and you'd be targeting this guy down here, right? These sellers, again, they should be trying to negate what just happened. So the seller should be trying to negate this breakout over this high over here. That high is at 73835.57. So if these buyers can bounce up to here, rip straight up into here, the seller should be interested in defending all of this supply. So I think this is pretty reasonable. And then as a buy, you're down here, right? Like you want to be looking for something along these lines, looking for this area to hold. The volume really picks back up over here. So if you do happen to get like a big drill into it, maybe even expand it because the targeting will be over here. I know that's really big risk, but the R should be okay. The R multiple should be okay. So if we move lower, I'd be more interested in that buy. And if we move higher, it makes sense to be looking for that sell. Okay. And you can zoom in and just take a look at how reactive the key levels of this structure are or were. So a value area low hold, point of control rejection, POC rejection over here. It's a near miss, but still I would consider that a POC rejection. Value area low rejection, and then so far a failure to get back to the value area low. So as of right now, it is a potential 4-hour inverse head and shoulders, but I would just keep looking to play against these massive structures, right? This is so much balance. This is so much balance. Reasonable for a sell, reasonable for a buy. All right. I would not be surprised if we spend some time trading around these two structures now. Now that you've created, it's kind of like this, right? You create this supply, you create this demand, you break out of it, and then you trade in between it. Or it's even like this, right? You create this supply, you break down. What is all of this if not just trading under this guy and over this guy? It's just how the market works. It's pretty much the opposite of this scenario. We're looking at the potential of this now, right? Where you have, again, a lot of supply, a lot of demand, back and forth trade between it. That's what we're looking out for. Okay. All right, moving on to Ethereum here. So Ethereum's in our trade zone now, and to be honest, I kind of feel like maybe it's a good idea to not trade Ethereum and move into Sol. Sol just in general looks a lot better. Made a new high, and it's not as actually I don't know. I think it is even more off its highs technically than Ethereum, but Ethereum just never broke to that new high. I don't love that. It's roughly the same. And it's showing me some relative weakness on this balance as well, right? Where Sol is still, it's closer to the highs of the bounce than Ethereum is. Yeah. Anyway, I still stand by the trade zone. I think it makes a lot of sense. This is essentially the gateway into all of this demand over here. it's a lot of demand. So trading inability to trade through this guy means we don't come into here. If we don't come into here, it means we should just expect more price action like this. And you can see how all of these lows, so many lows, 1, 2, 3, 4, 5, 5, I consider that a hold over the structure too. 6 lows already made off of this guy. So that's why the trade zone is designed as such. And if you do happen to hold this zone over here, then these buyers should be trying to make their way back up to the highs of the range. Whenever you break to a higher high, no follow through, they should try to test the lows of the range. That's just how that's just balance. That's just how balance works. You see it all the time. And so that's the logic of this. Okay. It's very similar to the dollar, right? The dollar is, for that forever balance here. Higher high, no follow through, test the lows of the range. No follow through, test the highs of the range. Lower low, no follow through. That's where our original trade zone was set up. Test the highs of the range. So again, that's just how balance works. Whenever you're looking at balance, the best thing to do is to identify the key structures. Where are these 2 key structures that are containing all of this balance? And the best value plays are going to be at those 2 structures because that's where change occurs. Right? If you are always taking location at where change occurs, which of course is always relative, but it's very easy to define that based on this specific context. If you're always doing that, then you're pretty much guaranteed to have good location, right? And that's a huge part of the overall game. All right, so moving on to URA here. All right, so URA also dipped into our trade zone here. Again, this zone is just based off of this guy. This is the gateway into all of this demand over here. It's what held price over here. It's what held price over here. So I still stand by this trade zone. I think it makes a lot of sense. We are just bigger picture, just balancing. So just like we were saying before, when you're balancing, what do you want to do? Find the structure that's dictating the lows. Find the structure that's dictating the highs. And your trades should be around those zones, around those areas of change. So that's it. Nothing else to say about URA, really. I think this is still a very reasonable place to be looking for trade. And so for review, I've been working on adding, and on last Wednesday, I had a decent session where I was able to add to the trade, and I think what I primarily like the primary lesson. Well, there's a lot of lessons, honestly. It's been a really good learning process trying to get it done, this new tactic. And it was just the same dealio, right? Like it's the same exact setup. Remember, I'm always waiting now for the second day. I want something to happen, something meaningful happen to on one day, and then I want to look for affirmation of that the next day. And so what I ended up doing on Wednesday was I was playing for this. So this day on the 26th, I'm gonna zoom in a second here, but so this was the meaningful day, right? The 25th, you break this support, you don't see follow through, and then you get a pretty decent bounce at the end of the day. So I was thinking, all right, maybe that's going to be the low, right? Maybe these buyers are going to defend this structure over here, not allow acceptance under this break, and then get back over this guy, which is again that would keep these buyers positioned well for a go at new highs. So if you zoom in, then it looks like this on this day here, right? So here is the bounce day. That's the 25th. That's the bounce day. Here's the 26th, right? And you'll notice that we open up pretty much at the highs of all of this end of day balance from the prior session. So I know then that, and everyone should know then that if these buyers can continue to find acceptance above this guy, okay, that's great. They're going to stay constructive relative to this bounce. And so the open was pretty much right at the value area low of this key structure that we've been talking about forever. So this is pretty much how you want to use, this is an example of how you can use these levels to trade on the day time frame, intraday trade, because you always want to have a top-down analysis, right? You want to know what's going on bigger picture, and then that helps you make your decisions on the lower time frames. It's like tactics and strategy, right? Strategy, bigger picture, tactics, the little things, the little actions that are going to help you actualize the strategy, the bigger picture strategy, right? Like if your strategy is to be more fit, right? Your tactics are going to be exercise every day, eat nutritious foods, steroids. Don't do steroids. But anyway, so that's really it. And so my plan then was to play just to 598.16. So remember, I'm looking to try to add. And so let's see, at 9:37 here. I'll just put this guy over here. Um, so 937, I buy this pass back over the 11.7 to 11.14 value area low. Maybe it's easier to look at like a chart over here or something. 26. Yeah. So this move, it dips under the value area low. It's like pretty much here, and then it moves back over it. Yeah, let me see if I can. Yeah, so I just bought this move back over the value area low, which is the 936 candle, right? And so, right, just a little bit after the post comes out a little bit after it, I mean. So you buy this over here, and then I chopped at the high of yesterday's end of the day range. So if you look at yesterday here, I don't have confidence, right, that they're going to trade over the highs of this balance from the prior session, which is what they need to get done. So if the sellers are going to play defense at any point on this morning move, should be over here, and they do play defense here, right? So I look to chop it up, take my risk out of this attempt, and that's already much better than 1R, right? Like the stop under the low, it's like this candle here. Stop is under the low, and the exit was already like 1.5R. So even if I stop out the rest, I'm gonna get paid on this attempt, which is very comforting. I think if you're gonna do doubles, if you're going to add and look to chop it up, so initiate with like 2 or more contracts, take half off, and then add back in if there's follow through. I think it makes more sense to have like better than 1R. I mean, technically, if your hit rate's better than 50%, then 1R is fine. But at least for me, I just kind of feel like it's not as worth it, the stress of it all. So, like the extra risk and the stress of it all. So, that's kind of where I'm at with it. I think going forward, if I can't get it better than a 1R chop, then I'll just start with singles. But I don't know. I'm still working through this whole process, right? Still trying to develop this system. So, anyway, I chopped it. And then I let the fellas know I'm looking to play to the 11.7 to 14 point of control. And so ideally what I want to see for an ad is balance over the opening range, right? And so here is the opening range, and you don't get that balance. You break back down into it, but you hold the Deepak here. And so the next ad that I do is just on the open back test. I just say, oh, you know what? I'm going to add on this guy. The open is over here, right? So I just add on this open, and I throw my stop under 984. Why did I do 984? Stop under 984. Oh, that's just this little rinky dink 1 minute higher low right here. 984. This low is 984. So I add that. Stop is under here for the ad. And to get to yesterday's regular trading hours high, which is over here, right? Hang on. Yesterday's regular trading hours high, that's again a little bit better than 1R, right? So something like this. My stop is under here, right? So a little bit better. It's 1.5R, right? So again, even if I stop out of this, if I get the regular trading hours high exit and I stop out of the ad, again, I'm getting paid for this attempt, right? So that's again how I want to look to get it done. My stop from my original, no, I'm sorry, I took the risk out of the ad, added on the 1 minute SS break. Yeah, at 9:48, I took the risk out of the ad. Yeah, so 9:48, take the risk out of the ad, and and then I added again on the 1 minute. Did I mess up these cards? Let's see. Added on the 1 minute SS break for, and then that's 9:59. That's over here, right? Mark it up. Oh, I'm sorry. I have the regular trading hours highs over here. Excuse me. Mark that up wrong. But at 9:48, I took that risk out. I don't really know what level then. I must have just been looking at the high of this range again. So I took the risk out at 48, and at this point now I have 2 remaining contracts, right? So I'm looking to get bigger as this trade works. And then at 1 minute stair step break at 9:59, that's over here. So we see this pullback over here, right? Oops. We see this pullback over here, and you don't get to the developing value area high. It's way over the opening range. It's pretty cheap to find out here, right? And so I just buy this 1 minute SS break again, throw my stop under here for the ad, chop it up at the regular trading hours high. I just make a post. I can take the risk out of the newest ad if the regular trading hours high is tested. Take the risk out, and then I let let the fellas know, I'll take off the 2 of the 3 contracts remaining at the point of control, right? If we can get to 598.16, we do get to 598.16, makes you sweat a little bit, but you do get to 598.16. I take off 2/3 of it, and I actually realized that I could have done a little bit better here, but I get it out of the ads, and then I throw my stop under the value area low, which is where my entry point was, right? My entry point was over here, so I throw the stop just a little bit under it for that last contract, because I don't know if these buyers can, like, this is where the buyers should have looked to, the sellers should have looked to defend, and they do that initially, and you can see how the buyers hold back test of it over here, and throughout the session, a lot of holds of the point of control, but eventually they roll over. So that's really it. And I realized I could have done something better. I should have added one more time at the higher low, 5-minute higher low on the miss of the depot, which was a pop and drop at 11:30, and then play to the value area high. So over here, yeah, over here, right? This drop and pop here, that could have been one more ad. So that was this. This is a depot hold, regular trading hours high back test, and that point of control was there. So a lot of confluence there. I could have added here one more time and then play to the value area high. Right, because again, look at how many problems these buyers had at the value area high, value area high, value area high, value area high, value area high. Okay, so again, this is how you want to use these key daily levels, which I post about every single day in the futures room, and I post up to my Twitter as well. So I actually tweeted about this level. Tweeted about this level over here. So if you're interested in getting, there's no commitment obviously to Twitter. So if you're interested in some updates, give me a follow, and it's all free information there, actionable stuff. And if you're interested in trading with a group of fellas, full-time traders, we've absorbed the full-time traders, so our group is even bigger now. We got Vegeta, Trent. His name's not really Vegeta. Trent. His name's not really Trent either. But we got a great trader from the full-time trader group now hanging out in the futures room with us. Trent. He's also working on adding. He's really good with scouting the trade, calling it out ahead of time, and then executing it or whatever, executing live. So, yeah, give us a shot if you're interested in learning how to trade like this with a bunch of knuckleheads. And if you're interested in the swing report, that is 2 novel trade ideas sent to you every single week. Update from Dan, update from myself. Any trades that I actually do take, I will post each action just like we do in the chat room, just like for these cards or whatever, just like we do over here. And that's really it. So links in the description below. If you made it this far, appreciate you sharing some of your time and energy with me. We would appreciate a like and subscribe if you wouldn't mind. Costs you nothing, helps us out a lot, lets us know to keep making content like this. And you can always leave me comments too about what kind of stuff you would like to see in these videos. I'd be happy to do that for you. And that is pretty much it. So again, I appreciate you sharing some of your time with me. I hope you enjoy the rest of your weekend, and I hope to see you all next time. Farewell.